Per Bender, investors are desperately looking for alternative investment possibilities. Real estate is an option. How have the rates and prices developed during the pandemic of COVID-19?
Well, the investment in real estate is still a very good opportunity and an alternative for equity markets. The development of prices and performance of real estate asset classes is different with regard to location and also the asset class itself. From a general standpoint, we can say that residential investments or logistic investments maybe have benefited from the current situation with COVID. Office investments have been evaluated in two ways, depending on the term of the lease agreement, of the business model of the tenant. And of course, retail and hotel that has been affected directly from the COVID has had a hard time the last month.
Now, your company Acron is specialized on so-called club deals. Could you elaborate a little bit on that investment possibility?
Sure. Well, a club deal is an alternative to direct real estate investments and the investment in a diversified stock-quoted real estate fund. It provides the advantages of both and an alternative to both investment vehicles. In general, saying a club deal is a group of investors with aligned interest that want to invest in an attractive real estate transaction, but that cannot do it alone because of volume, location, size. So this is where we come in and make these investments possible.
Could you give us some examples of club deals that you executed lately?
Sure, we have just exited 2 of our club deal investments here in Switzerland. This is part of our Acron Helvetia investment series. We have just sold Helvetia 5, for example, was a logistic property in Basel with a very nice return for our investors. We have just liquidated a club deal investing in office properties in Switzerland with a success of 15% IRR. But we are also doing club deal structures for investments in the US, like the Sheraton Fisherman's Wharf in San Francisco or our Navy Pier Hotel in Chicago. So there is a number of examples in our 40 years history.
Would you say that there are some specific reasons that are more lucrative than others?
Well, I wouldn't say club deals make sense in a certain country. Of course, club deals needs to provide more return than stock-voted real estate investments. But the real strength of a club deal is to provide the possibilities for an investor to invest in a country, in an asset class he would normally not be able to. So it provides a possibility to diversify beyond what is available today.
What about the liquidity of such a vehicle, and what are the exit possibilities?
Well, as the real estate market itself, the liquidity of our investments is limited. But we try to compensate this disadvantage compared to stock-quoted real estate investments with providing 100% transparency. Our investor knows from the beginning, before his investment decision, in what he will invest, what term he will invest, what are the weaknesses, the strength. And normally our real estate club deal stays the same from the acquisition to the exit. If there is an urgent need to exit or investor wants to change these investments, we normally find a substitute buyer in our investment segment. So we try to provide with a secondary market, and this normally worked, especially in the history.
What kind of investors are you targeting?
Well, our investors are mainly high net worth individuals, family offices and small institutional investors. These investors normally are already invested in direct investments, indirect real estate quoted, stock quoted investments, and they are now looking for ways to diversify and to enter into new locations or asset classes. And so we are dealing with real sophisticated investors.
Looking ahead, what development of real estate prices do you see, and what are your next plans?
Well, I think real estate will stay attractive. It is a good investment in substance. This is what the world expects. Especially in Switzerland, we have an environment of real estate that is very stable. This is due to regulatory influence, the ownership structure in Switzerland, also tax reasons. So there is less volatility in the Swiss real estate market. And this is what the investor wants, always wanted. So I remain positive for the Swiss real estate market. And well, it's hard to say for all real estate around the world, but real estate will be a good alternative for investments like in shares or bonds. This is one thing that Corona won't change.
Thank you very much for your explanations.
Thank you, Mr. Baumann.